In this video, we're going to work on Chapter 6, Homework Problems 8 to 12, our revenue exception, which is long-term construction contracts. So, in 2021, the Westgate Construction Company entered into a contract to construct a road for Santa Clara County for $10 million. The road was completed in 2023. Information related to the contract is as follows. So we have costs incurred during the year, estimated cost to complete as of year end, billings during the year, and then cash collections during the year. So the first thing that we're supposed to do is we're supposed to calculate the amount of revenue and or gross profit and loss to be recognized in each of the 3 years. We're not supposed to round our intermediate calculations. Then in step 2, we're supposed to do some journal entries. I have this already set up for journal entries, so I'm going to go to a different sheet to do the calculations. So let's work on our calculations for part 1. So let's work out in 2021. So for each year, in fact, I'm going to delete that for right now. Let's look at the formula to calculate our percent complete. So the formula to calculate our percent complete is costs incurred to date and we're going to divide that by total estimated cost to complete the project. Now notice we're going to calculate this not year by year, but it's going to be to date. So in 2021, we're just going to look at 2021, but in 2022, we're going to look at 2021 and 2022, and in 2023, we're going to look at 2021, 2022, and 2023. So let's get going. So in 2021, I'm just going to do the calculations, the costs incurred to date, that's given in the problem, $2,059,000. So at this point, we think it's going to take another $5,041,000 to complete the project. So at this point, the total estimated cost to complete is we're going to take the $2,059,000 that we already spent, and we're going to add what we think at this point we need to complete it, $5,041,000. So at this point, we think this road is going to cost us $7,100,000 to complete. So to calculate the percent complete, because again, the total estimated cost to complete the project, total estimated cost is what we spent already, what we still have to spend. So in the denominator, it's not what we need to spend from this point forward, it's all of the costs that we need to complete the project. So at this point, our percent complete, we take the $2,059,000, and we're going to divide by $7,100,000, the total cost that we think at this point it's going to take us to complete this road. So if I take $2,059,000 and I divide by $7,100,000, I get a percentage complete of 0.29 or 29% complete. Now all I need for that percent complete is the contract price. So notice we're given in the problem that the contract price is $10 million. So we're allowed to recognize 29% of that $10 million as revenue. which of course is 2,900,000. So in year one, we're going to recognize 2,900,000 in revenue, and our costs incurred to date are 2,059,000. So our total profit at this time is going to be our revenues minus our costs. So we're going to take the 2,900,000 and we're going to subtract the 2,059,000. Keep doing that. And the profit that we're going to recognize in year one $841,000. Now, this gets a little bit more complicated in 2022, just a little bit, because whatever we calculate in 2022, we're going to calculate to date, so we're going to have to subtract out whatever we recognized in 2021, because revenues are matched to the period of time in which they're earned. So in 2022, we're not going to show 2021 plus 2022. We're only going to show that additional amount we earned in 2022. So let's get going in 2022, and we're going to have to back out some of those 2021 numbers. So in 2022, we have two calculations that we have to do. We have to calculate our costs incurred to date. Remember, we have our costs incurred to date over the total estimated cost to complete the project. So by 2022, our costs incurred to date is, so far we spent $2,059,000. Keep doing that. In year one, 2021, and $2,627,000. In the second year, in 2022. So far, as of the end of 2022, we have incurred $2,059,000 plus 2,627, $4,686,000 in costs. Now, we have to calculate the total costs under the project. So the denominator is the total estimated costs. Well, in 2021, we spent $2,059,000. 2022, $2,627,000. And at the end of 2022, we think it's going to take us $2,414,000 more in the year three to complete that project. So to estimate the total cost that we think, we have to add the actual costs incurred in the last 2 years plus the cost that we think it's going to take us to complete the project. Let me zoom out a little bit so you can see all of my numbers. So the costs to complete the project, total cost to complete the project, the first thing we're going to do is add the $2,059,000 that we've already spent, the $2,627,000 that we've already spent, and then we need to add as of the end of year two, because 2022 we don't know what's going to happen in 2023. So at this point we think it's going to take us $2,414,000 more to complete it. So at this point we think that this road is going to cost us $2,059,000. Add $2,627,000 and add $2,414,000. So it's still the $7,100,000. Okay, now we're going to calculate the percent complete. So to calculate the percent complete, we're going to take $4,686,000 and we're going to divide by 7,100,000. And at the end of year 2, we are 66% complete. Now, the only hairy part at this point is the revenue, because the expenses that we're going to show in year 2 are going to be $2,627,000, the costs incurred during the year. But calculating the revenue is going to get slightly hairy because the 66% includes year 1 and year 2. So once we calculate the revenue, we have to back out anything that was recognized in year 1. So step 1 for the revenue is we're going to take 66% of the contract price of $10 million. So of course that's $6,600,000. And then what we have to do is we have to subtract the revenue from year 1. And we have that number right over here, $2,900,000. So the difference is what we're going to recognize in year 2. So in year 2, we're just going to show 6,600,000 minus 2,900,000, 3,700,000 of revenue. Now for our profit year 2, our costs in year 2 are 2,627,000. So our profit year 2 is going to be 3,700,000 minus the costs incurred in year 2, 2,627,000. $1,073,000. Now let's move on to 2023. 2023 is very easy because we know our costs incurred during the year, 2,655,000, and we're 100% complete. So the revenue that we're going to recognize in 2023 is the total contract price of $10 million minus what we recognized in 2021 and minus what we recognized in 2022. So our revenue for 2023, we take the total contract price of $10 million. We subtract out the year 1 revenue. So that's negative $2,900,000. We subtract out the year 2 revenue. And we just recognize the remainder in year 3, $3,400,000. Now we're given in the problem that in year 3, our costs are $2,655,400. So our profit for year 3 is the $3,400,000 of revenue that we recognize minus our $2,655,400 of costs. $744,600. Now let's move on to part 2, which is the journal entries. I'm going to apologize about this, but there weren't very many problems on long-term construction contracts, and I wanted to make sure that you did a homework problem on this. So moving on to the next part of this problem, we're supposed to complete the necessary journal entries for 2021, and it tells us to credit various account for construction costs incurred. Then we're going to do the journal entries for 2022 and the journal entries for 2023. Now, the way I remember it is I just remember the journal entries going down the list. So if you remember the journal entries going down the list, all you have to do is remember the amounts. Some of the amounts are going to be given in part 1. Some of the amounts we already have, so we may have to go back to part 1 to look up some of those amounts. Actually, I'm going to put in some of those amounts right now. Our revenue that we're going to show in year 1 was $2,900,000. Our revenue that we showed in year 2 was $3,700,000. We're going to need those numbers. And the revenue that we're going to show in year 3, $3,400,000. So once we go to the next sheet, I will write down those numbers. Okay, now just going down the list. So again, once we go down the list, all we have to do is put in the debits and credits and then just drop in the numbers. And as I said, most of the numbers are going to be given to us. We won't have to figure out those profit amounts, but for each year we will know the revenues and we will know the expenses, so it'll be pretty easy to do the profit. So for the costs incurred during the year, we are going to debit an account called construction in progress. That is like work in process, so it's called construction in progress, and it's an asset account because whatever money we spend on the road, we actually own the road until that ribbon is cut. So until then we own the road, and that's the asset account for the road that we own. And then as it says, we're going to credit various accounts. And the reason for that is costs incurred during the year are going to be a lot of different costs that we're going to have to make that road. So we're going to have materials, tar and rocks and whatever other materials that we use to make a road. We have lots and lots of labor. We have depreciation on the trucks and the jackhammers and all the other things. We have indirect materials. We have indirect labor. We have gas for the vehicles. So all of those are all the different various accounts that we're going to use. So let me put that in bold over here so you know that that's not a part of the journal entry. So once again, because those numbers are given each year, we're just going to drop it in. Now the second thing that we're going to have to journalize during the year is the billings during the year. So this time I'm going to put the bold over here. Now billings is not the same as revenue. Billings is what we want the customer to prepay because we're going to have to pay for all of that materials and labor and overhead. So we're not going to wait and have the customer pay us the $10 million at the end of 3 years. Now the billings are actually unearned revenue for the construction company because until they deliver the road, they haven't done any service yet. They still own the road. So any billings that they have are unearned revenue. So for billings during the year, we're going to debit accounts receivable. and we're going to credit an account called billings. Billings or billings on account. Now, once again, that billings is going to be an unearned revenue account, so it is going to be a liability, and I want to do some T accounts at the end because the book isn't going to show you how everything is going to close out at the end. And then finally, when we have our cash collections, we're just going to debit cash, and we're going to credit accounts receivable. Now, the final thing that we're going to have to do at the end of the year is we're going to have to do an adjusting entry to recognize the revenues and expenses. So we're going to debit an account like construction expenses. We're going to credit our revenue account, and then what's going to happen is the difference between the two, they're not going to balance. The difference between the two is going to be debited to construction in progress, which is going to be the profit. So we're going to debit our costs of construction, which is an expense account. And we're going to debit that for the costs incurred during the year. We are going to debit our construction in progress. And that is going to be for the amount of the profit. And then we're going to credit our construction revenue. For the amount of revenue that we're going to be allowed to recognize in each year. Okay, so that's all we're going to have to do for each year. So let's get going with 2A and for year 1. So the first journal entry that we're going to have to do for year 1 is going to be to record our construction costs, and I'll just write down the number over here for 2021. Our construction costs are $2,059,000. So just as I said, we're going to debit for our construction costs, construction in progress, for the $2,059,000. And as I said, the credit is going to be to various accounts. It tells you to do it. It's one of my least favorite ones. I didn't like it when my professor did it. So we have our debit and credit. Let me try to make that a little bit bigger so you can see it. And we've got our construction costs. So as I said, all we have to do is debit the construction in progress and various accounts for the amount of the costs that year. Number 2 is to record the progress billings. So for the progress billings, we're going to debit accounts receivable, and we're going to credit our billings, and they actually gave us that number. So for the 2021, our billings are $2,190,000. Part 3 is going to be the cash collections. Our cash collections were given in the problem as $1,895,000. And for any cash collection, we're going to debit cash, and we're going to credit our accounts receivable. And then finally, the last one is going to be our adjusting entry at the end of the year, where we have to show all of the revenues, all of the expenses, and then the profit. So we're going to debit costs of construction for the costs incurred in year one. So that's going to be the $2,059,000. We're going to debit construction in progress for the amount of the profit. We'll calculate that in a moment. And we're going to credit our construction revenue. So revenue from long-term contracts, we're going to credit that amount for the revenue, $2,900,000. So the debit to our construction in progress for year one is going to be the $2,059,000 minus the $2,900,000, which is going to be $841,000. I'm sorry, $2,900,000 minus $2,059,000. So we have $841,000 is the debit to our construction in progress. Now we're ready to move on. I'll check and make sure that I'm okay, that I should be okay. And then we'll just move on to requirement 2B, which is just year two. So in year two, we're going to use revenue of $3,700,000. Our costs incurred during the year in 2022 are $2,627,000. So to calculate our profit for year two, we're going to take the $3,700,000 and we're going to subtract the 2,627,000. So our profit for year two is going to be $1,073,000. And while we're doing the journal entries, let's just write down the numbers so I don't have to keep scrolling up and down. For 2022, our billings are $2,496,000. That's just given in the problem. And our collections are $2,400,000. Just once again, just to make sure that I don't have to keep scrolling up. So let me go back to the question. And let's do our 2B. And let's do our journal entries. So for 2022, once again, we're going to just record our construction costs. So to record our construction costs, we're going to debit construction in progress. And that is going to be for our costs during the year. So year two, our costs were $2,627,000. And we're going to credit our various accounts. I've already explained that. I didn't like it when my professor showed us that. I didn't like the various accounts. Now we move on to number 2, which is the progress billings. So for progress billings, we just debit accounts receivable. And we're going to credit our billings on construction contract. So I wrote down that number for year 2, $2,496,000. We move on to number 3, cash collections. So for cash collections, we debit cash and we credit our accounts receivable. And we were given that number, $2,400,000 and $2,400,000. And finally, we have our adjusting entry at year end to recognize the revenues and expenses. So we're going to debit the costs of construction for the expenses incurred during the year, $2,627,000. We're going to debit the construction in progress for the profit, $1,073,000, and we're going to credit construction revenue for the revenue in 2022, $3.7 million. So I'm going to debit construction in progress, and I'm going to credit our revenue from long-term contracts. So the cost of construction, $2,627,000. My profit, I already calculated, is $1,073,000. And finally, I have my revenue from the long-term contract, 2022, $3,700,000. So it liked all my journal entries for year 2. Now let's go on to year 3. So in year 3, all we have to do is just journalize everything that hasn't been journalized so far. So we go through the same thing in year 3. So let's just write down the numbers. In 2023, we've already calculated that we're going to show revenue of $3,400,000. We're going to have costs of $2,655,400. So our profit would be $3,400,000 minus the $2,655,400. So our profit for year 3, $744,600, and we're given our billings is $5,314,000, and cash collections during the year, $5,705,000. So once again, we're just going to go through it down the list, 1, 2, 3, 4. So to record our construction costs, we debit construction in progress. We credit our various accounts. And for 2023, that amount is $2,655,400, the costs incurred during the year. Number 2, progress billings. For progress billings, we just debit accounts receivable and credit our billings. And we were given that amount, $5,314,000 and $5,314,000. For part 3, we do the cash collections. That should come from principles of accounting, like day 3. So we're going to debit cash and credit accounts receivable. And we were given that amount the third year, $5,705,000. And then in year 4, we're just going to recognize everything. Year 4. In year 3, we're just going to recognize everything that we didn't do, recognize already in years 1 and 2. So we just recognize the remainder of the costs, we recognize the remainder of the revenue, and just show that profit. So we do our adjusting entry to recognize the revenues and expenses. We're going to debit cost of construction for the costs incurred during the year. We're going to debit construction in progress for the amount of the profit. We've already calculated that. And we're going to credit our revenue from construction for the amount of the revenue. So for year 3, our costs, $2,655,400. Construction in progress is the profit, which is $744,600. And finally, we're going to credit our revenue, $3,400,000. And this homework problem actually forgot one journal entry. So there's actually one more journal entry that we're going to need to finish this whole thing out. So what's going to happen is, if you post everything at the end of year 3, you're going to be left with one asset account, construction in progress, and one unearned revenue account, billings on account. So let's just post all of our journal entries to the construction in progress and the billings in account. So you're going to notice that every year we're going to debit construction in progress, first for the costs incurred during the year, and then for the profit. Each year we're going to credit billings for the amount of the billings. So I'm just going to have to go back and look at all of those billings for the first and the second year, as I don't have them. So let's just write down those numbers so I have them. So my billings for 2021, my billings during the year were $2,190,000. For 2022, my billings were $2,496,000. And for 2023, my billings were $5,314,000. So let's post to these two accounts and let's close out this problem because your book forgot the final closing entry that we need. So as I said, each year we're going to debit construction in progress, first for the costs incurred and then for the profit. So year 1, we're going to debit construction in progress for $2,059,000 and then for $841,000. Year 1, we're going to credit billings for the amount of the billings, $2,190,000. Year 2, since it's an asset account, it's not going to close. We're going to debit construction in progress for the costs incurred during the year and for the profit. So year 2, we're going to debit it $2,627,000 and then for $1,073,000. Then in year 2, we're going to credit our billings, $2,496,000. This comes right from the journal entries. Now year 3, we're going to debit our construction in progress for the costs incurred during the year and the profit. So in year 3, we're going to debit construction in progress for $2,655,400 and then $744,600. And we're going to credit billings for the amount of the billings, $5,314,000. So now I'm just going to add up each one of these accounts. So construction in progress, it just came out that way because the cell was too narrow. So it's 10 million. I'll put in the zeros so you can see. So we have 10 million. And for the billings, we also have 10 million. So what happens is, this is an asset account, and this is a liability, specifically unearned revenue. Because again, until we cut that ribbon on the road, we still own the road and we still have to deliver it because the customer has paid in advance. That's what the billings are, the customer has paid in advance. So to close out this entire contract at the end of the year, we're going to debit billings on account for the 10 million. And we're going to credit construction in progress. Again, that's just because the cell is not wide enough. And we're going to credit construction in progress for the 10 million. And basically everything else is just cash and accounts receivable, so that flows through. And all of the others are revenues and expenses. Costs of construction and construction revenues are revenues and expenses. So they're all closed. So we're all done now, and all the accounts related to this construction progress are closed.